it's a great pleasure to be here, particularly in this hotel. As you may know, as James was describing the glory days of this hotel when it was opened, and it didn't always have a glorious history, and it was closed as a hotel in the 1930s. I am a great fan of Sir John Betjeman, the former poet laureate, and you may know that he campaigned when this was threatened with demolition in the 1960s. Thankfully, that campaign worked. It didn't make it a hotel. It was used as British Rail offices for about 20 or 30 years. But 70 years on, it's reopened as a hotel, and I'm very pleased that Reed chose it as a location. It's a great historic building, a great Victorian building, and I hope it has a magnificent future which matches the glory days of its opening. I want to talk about the budget and some of the detail of the budget, but also a little bit of big picture in terms of how this affects the economic outlook and the employment outlook. This was the second budget from George Osborne, and I think he faced what people sometimes call in the music business the difficult second album problem, which is how you follow a big budget, which the June 2010 budget certainly was, did most of the things that will set the tone for this Parliament, including the big spending cuts which had detailed in October, and the tax increases, including, of course, VAT, which went up in January. National insurance for employees is about to go up. So this could never be as big a budget as that. The question is whether the individual measures were worthwhile, and whether, in essence, the economy is still on track, whether we can grow through this really quite substantial fiscal tightening that we're seeing, the cuts in public spending and the increases in taxes. So that is the question, I think, posed by the budget. That's in most of the commentary this morning. What will be the effect on growth? What will be the effect on jobs? And we had some bits of tax reform announced yesterday. How meaningful will they be? Talk of some kind of merger of at least the administration of tax and national insurance, which I think many businesses will welcome, stopping somewhat short of full tax reform in the sense of actually merging the two taxes. So let's go through some of the aspects of the budget, then I'll talk about the economic outlook. In terms of the overview, I mean, the headlines, of course, are all about fuel duty. We were going to get a 5p increase in fuel duty under the escalator. Instead, there was the 1p cut. Now, it was quite interesting watching the news last night about how many people were sort of dismissive of a 1p cut in fuel duty. As you might expect, it's not very much at a time when petrol prices have risen quite substantially. And it's always, if you like, that's the problem that chancellors always face, that you never get any credit for postponing things that don't then happen. People hadn't maybe got used to the idea that petrol prices are about to go up by 5p a litre. A 1p cut looks like a 1p cut, which looks quite small. And there was quite a lot of political capital vested in that move. But I think it was overall pretty astute. I mean, I think before the budget, people wondered how you could introduce this fair fuel stabiliser. It had already been, officials at the Office of Budget Responsibility had already said that it didn't work. The idea that the government benefited so much from rising oil prices that it could afford to cut duty didn't really work. So they had to have something else, and the something else, of course, was North Sea taxes. Overall, the budget didn't do anything at all. In net terms, a 10 million giveaway is the smallest of small change. I think it's less than a 0.002% of this year's tax revenues. So it's very, very small change. Quite a lot to you and me, but nothing at all in terms of the public finances. I think I agree with James that the tone in terms of business was very positive. There was a cut in corporation tax that was unexpected. Business hadn't expected that. But there were also other hints that I think were quite positive. And I think for some businesses, the idea, the hint that maybe the top rate of tax is only temporary, that the taxman, the HMRC, has been asked to look at it, see whether it raises any net revenue, will also be regarded as a positive move. And then we had a lot of documents yesterday which included the plan for growth. So I'll talk a little bit about those. We're still, of course, in the middle of this substantial fiscal tightening that was announced last year in two tranches, the June budget and the October spending review. Most of that has now, on the tax side, has come through. The only thing we're waiting for, the only significant thing we're waiting for on the tax side is next month's increase in national insurance. The spending cuts, importantly, are yet to come. I mean, there's been a little bit in this fiscal year, but most of it starts in April. So, you would think from a lot of the coverage that you read all the time that we're already in the middle of this intense spending squeeze. This has just been the limbering up process. The real action starts from now. So we don't really know how bad that's going to be, how severe that's going to be. The only thing I would point to on that is that we have been here before in terms of extended squeezes on public spending. And most people, when you say that, think, well, that happened in the 70s when we had to call in the IMF. It happened relatively recently in the 1990s. So had a big squeeze on public spending in the 1990s. The budget deficit came down very substantially, and yet the economy grew through that period. So it's not completely unknown territory, but as I say, you might think from the coverage that we're already in the middle of this intense period of public spending squeeze. We're not quite there yet. It starts in earnest next month. And it will be substantial, and particularly for, as it says on the slide, some of those departments that aren't ring-fenced like the NHS. What were the big changes in the budget yesterday? I tend to look in terms of, the numbers, the significant numbers. Other people may prefer to focus on individual but small and not very costly tax measures. But the big numbers, I mean, the offsetting, that you had the fuel duty cut, the escalator, the idea of the escalator was that the fuel duties would rise by more than inflation every year. That was part of Labour's deficit reduction plan. That essentially has been scrapped unless the oil price falls below $75 a barrel. The oil price at the moment is about $115 a barrel. If the oil price falls below $75 a barrel, then apparently the escalator will be reinstated. I'll actually believe that when I see it. I think it's going to be very difficult for a Chancellor, particularly in the run-up to an election, to reinstate the fuel duty escalator. I think this is probably a one-way traffic on this one. In other words, it's easy to cancel a planned rise. It's difficult to reinstate one when oil prices fall. So I'd be a little bit sceptical about that. We had quite a substantial clampdown on tax avoidance. Now, most of us are pretty skeptical about this because, every Chancellor in every budget announces a clampdown on tax avoidance. Sometimes it brings in some extra money, often it doesn't. It's quite important, it was quite important in terms of the government's sums. I hope the screen's not going to fall over, by the way. So this is necessary and needed in terms of making this a neutral budget. But the numbers involved, when you think that the VAT increase that we had in January raises between 13 and 14 billion a year, then the kind of numbers we were talking, even on the big measures in the budget yesterday, were quite small beer. Corporation tax, an extra 1% off that, is welcome. Not that expensive, not as expensive as you might think. And of course, the banks had to be ring-fenced from that cut for political reasons. But those are the big measures that we had yesterday in terms of the cost to the exchequer. How do we all feel about everything that's happening? Should we be cheerful about yesterday's budget as members of the public, as households, or should we be properly analysing this in terms of what has already been announced, what is still in the pipeline? And the answer to that is that we are in the middle of still a very substantial tax squeeze, and the Treasury was honest enough to put this chart in their documents yesterday. Mainly as a result of higher VAT, national insurance going up, what was a planned freeze on the high rate allowance and so on, bringing more people into the tax net. If you earn just over £100,000, you have a marginal tax rate of 62%, including national insurance, from next month. 50% rate, of course, it's some people in the top end of the income distribution. So most of us are paying more tax. People at the bottom end losing some benefits over the next few years, despite, and that wasn't really changed by this budget. The budget was, was pretty neutral in that respect, and so we're still in the middle of quite a substantial tax squeeze. As I said, earlier, most of what economists know as the fiscal consolidation, cutting the deficit, is in terms of spending cuts. 3/4 is spending cuts, 1/4 is through higher taxes. But these tax increases are still quite substantial and will affect household income. What about jobs? I mean, people, obviously you are particularly interested in, and Reid is particularly interested in employment. What does it do for employment? I think it sowed a few seeds, and obviously a response to to what the political problem of very high youth unemployment. I mean, it has been the case that unemployment has been particularly concentrated in the recession among young people. I mean, if you look at older workers, there's been an increase in employment among older workers, including people beyond normal retirement age, including the 50 to 64 age group. Much less labour market success for younger people. It's normally the case that this happens, because young people require active recruitment. When recruitment stops, young people, have difficulty. So, and they have difficulty building up the kind of work experience. So the government has responded to that. We've got, instead of the 10 enterprise zones that were suggested before the budget, we've got 21 of them. It remains to be seen whether those will work or not. The record last time in the 1980s was mixed. Some of them were very successful, some of them less so. The question, of course, is whether, when you've got a period of public sector job losses, you can have compensating increases in private sector employment. Now, the answer to that, and I'll come back to this in a little bit later, the answer to that is so far so good. I mean, over the past 12 months, we've seen 428,000 private sector jobs created. We've seen some public sector jobs lost, but overall the balance is strongly in favour of private sector employment. And this has happened before. I mean, if you recall, and most people don't have that good recall of the detail of the 1990s, but in the 1990s we saw something like 700,000 public sector jobs lost. Over that period, we saw overall employment grow quite substantially. If you take the long period from the recession of the early 90s to the recession that began in 2008, then we saw overall some 4 million extra jobs in the UK, and in net terms, all of those were in the private sector. So the public sector went down and went up again, ending up roughly where it had started at the end of the early 90s recession. The overall jobs increased by 4 million. This economy is pretty good at creating private sector jobs, so we shouldn't be too gloomy about prospects, even though prospects are clouded by the two great overhangs that we have at the moment, which I'll come on to. The other thing, of course, every government says it will ease red tape, ease the regulatory burden. I get the impression, and it may be just the first flush of youth, that this government is more serious about it than most. I think they aim to do something. I mean, previous governments have had regulatory reviews and so on. This one seems to mean business in terms of reducing the red tape burden. We'll see.